Okay, I want to thank everybody for being here. I certainly do appreciate it, and I think you're going to be in for a treat. I used to think that I could trade gaps, and I was pretty confident about it until I ran across this guy called 1973 Hog. His first name's Steve, and he shared some of his gap trades and some of his knowledge with me, and boy, did I have to learn about gaps again. And what a great learning experience it has been, because Steve has shared a great deal in the trading room and to our members. And I think anyone that's watched one of his presentations or has seen him trade gaps, especially during earnings season, which truly amazes me, what he does with them. You 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 know what I'm talking about, and I think you'll be in for a treat today. Um, I think I think you should take notes. This is going to be recorded, so we'll get the recording out. Um, but take notes. Don't be afraid to ask questions. Just keep in mind that during his presentation, if he asks for questions, then go for it. But just keep it in mind that he can't stop and answer every single question as a presentation is being presented. Now, if you want to know a little bit about Steve, let's see, I'm going to put a link up here. Don't waste your time on this link. But if you want to take a look at Steve, he's got a page on our website, and go to that link, and you can scroll all the way to the bottom, and you'll see a little bit about Steve there. Okay, I'm gonna get out of here. This presentation just may go right into the close. So as far as I'm done, we're done today, unless Steve finishes. So good trading, everybody. Thank you for being here, and we'll see everybody when Steve is finished. Steve, thank you very much. Take it away.
Well, thanks, Rick, and thanks for giving me the opportunity to make a presentation here in the room. And want to thank everybody who's stopped by to listen, and hopefully you'll grab a few things out of the presentation. This is an amalgamation of quite a number of years of trading observation. Um, I've got some scars on my knuckles from doing things wrong, but I've tried to analyze and learn every step of the way. So I hope I can impart some of that knowledge that I've got, and it's not perfect, but nothing is in the trading world. Can I whisper louder? Well, right now, if I put it on any louder, I'd probably overmodulate. Do you have the capability of putting up your mic, I mean your speakers? And Judy, I should be able to get the presentation out shortly. In fact, why don't I do that right now? I'll post. Yeah, that's what I was thinking. Yeah, those that work um, off of laptops tend to have a more difficult time with the volumes. I hit the recorder, Gigi. It's recording now. I've just posted my charts so that you can follow along. And Bill E., if you would ask me that question about what happened today in the financials in the Q&A, I'd be happy to tell you, but I don't want to interrupt the presentation. I am going to basically ignore anything that's in the chat room, and I'm going to try to get through. I have 30 slides to go through. It's going to take a little bit of time. I'll try to not be as long-winded as Rick implied. I'm not going to go to the close. I can't talk that long, but we're probably going to be here at least an hour with the quick Q&A. So let's get started. Okay. Let's see. Whoops. Why trade gaps? And what are the reasons? What are gaps? But I trade gaps primarily because they're probably, they're often the beginning of a major move. They're A gap up or down could be a beginning of a reversal, especially if the trend, the gap reverses the trend. If it gaps in the same direction, it could actually signal the end of a move too, and if that could also be a trade, and we'll talk about it. And therefore, if you get a reversal and it catches people off guard, that can be a very profitable trade if we do it properly. And why do stocks gap? Well, you guys probably know inherently a lot of it, so I'm going to go over it in a little bit. There's usually some sort of news event or something that drives it, and they kind of follow into two different categories. Category number one is scheduled events, ones that you know about in advance. Things like earnings, the earnings date of release and stuff is usually in advance known. Some sort of conference they're going to attend or present at, some sort of market reports like today's jobs report. We knew about that long in advance. The FOMC, the Fed minutes, those kinds of things. We know about those events in advance. The unscheduled events, the YAHAs I like to talk about, are things like new contract award, analyst upgrade and downgrades, and earnings guidance, or surprise, surprise, and earnings warning. They can have substantial moves when people get caught literally with their pants down on the wrong side of the trade. After this event, the price will rise and fall to meet supply and demand equilibrium, and we need to take advantage of that disequilibrium that happens when people are caught off guard. The key question isn't, was earnings good? Let's take earnings, for example, and I like to use earnings because it's one that can be thought of ahead of time. But it's not, to me, how well the earnings are, whether they made a profit or a loss, or they did better than the last quarter, whatever. It's the reaction to those earnings. And it's all reflected in the charts. And so therefore, prior price patterns, the whole thing is all going to be basic on emotions rather than logic. The logic will be factored into the charts, but people are going to overreact one way or the other based on their emotions. We need some things to remember when you trade gaps. Some people think that everything that gaps up is a good short, that you can fade every gap. That's not necessarily true, and I'm going to show you why. I'm going to show you some of the things that you need to watch for to either increase the probability that the gaps that you get into are successful, and probably more importantly, to help you avoid the gaps that are not good to get into in the first place. So all up gaps are not good shorts. All down gaps are not good longs. Not all gaps get filled, at least in the near term, what we're talking about in a swing or day trade time frame. A gap in the opposite direction of the recent price movement will create a shock value that can be exploited by us, and by that I mean it's people caught on the wrong side of a trade. People thought a stock would never get over $75, and suddenly it gaps to 78 or 79, and they've got millions of dollars in this trade. They're sitting there with a pucker factor, trying to hang on, hoping that it'll reverse back down. We need to note where the stock is gapping to. But that means I'm going to look to the left side of the chart. I'm going to see, is there a prior support area that's gapping down to? Is there a prior resistance level that it's gapping up to? Or is it gapping in between those, and that could give me an intermediate target or so? What's the overall market doing? So these are not gapping in and of themselves. So if the stock is gapping up 1%, 2%, that's not necessarily a big gap. If it goes 3 or 4%, that could be good. If it's not on earnings or anything, but the whole market is gapping up, if you get a good gapper, but the market is also gapping up well, is it the market that's floating it up, or is it the stock on its own? If the market's flat or down and this stock is gapping up significantly, now you have a divergence. You're showing relative strength, and that's what I looked about. Also, what's the sector? Is the sector all going up? Is that one going up and none of the rest are? you need to know whether the sector is in favor or not. So these are things to take into consideration, and some of these will not be able to easily run through all of those in the pre-market. If you start to turn your computer on at 9 o'clock, listen to Rick talk or anybody else come in there, you show up at 9 o'clock, you're not going to be ready. You're not going to see all these things. That's why I like to do the earnings from the night before. Then I can work for a couple of hours looking at the best 5 or 6 to put in my watch list for the next morning. All right, elements of gap trading plan. I can't emphasize enough, everybody has to have a trading plan. If you don't have a plan, you're almost destined to failure. You're just winging it. And in the Air Force, we would chair fly our missions in advance. By doing that, what I'm saying by doing that, what we're doing is on the ground, we're trying to anticipate every possible situation we could get into, analyze the pros and cons of every maneuver, strategy, employment tactic that we could use, and what the outcome probabilities would be. So therefore, when we encountered something like that in the air, it was a matter of, oh, I've seen this before, I've heard this before, do X, break left, Anyway, setups. I'm going to cover, you need to know what kind of setups you look for. If a gap is gapping in the same direction as, let's say, you've been going up for 5 or 6 days running into earnings, then it does a 2, 3, 4, 5% gap up to a resistance area on earnings. It's time to go long, right? I would say that that's probably not a time that I'd be wanting to go long without it, doing some sort of basing. Some tips on how to scan for these and some ideas, and it really depends on the tools you have. Good and bad entries. Some traps to watch out for. I covered one just a minute ago. Trades management, and I'm going to focus primarily on exit, but there is trade and money risk management rules before you enter and during the trade, and some other rules that we'll probably cover as well. Now, what effect will that gap have? What do you think the reaction of a hedge fund manager who has millions of dollars invested in this will be suddenly if that stock is going against them, and talking about against them in a big way? Think back to if you got a position and you were doing okay, it was going your way, and then suddenly you wake up the next morning, it opens up and you're 500 down, 1,000 down, 5,000 down. Now multiply that by another 1,000 or 100 times to 1,000 times. What do you think would happen when this fund manager is down $1 million? I think he's probably going to be sweating a little bit. What is the boss? And he'll be sweating a lot because the boss is going to give him grief. And they have computer programs that go on constantly telling them where they stand at every possible moment and what the risks are. And many times when they bet the wrong way and it goes against them, the boss comes down and said, you've got to get out of that position now, by the end of the day. So they almost have to take whatever they can get. So then it says, what are they going to take and how can we help them get out of their pain? There are types of gaps that I look for. These are not all inclusive, but there's 4 of them that happen an awful lot and that I look for. It's a bullish gap over a recent era consolidation. So if you had a stock out there that had consolidated and maybe pulled back even one day or a little bit, and then suddenly gaps over that consolidation above it all and solidly stays there, that's very bullish. What about a bullish gap over a long decline? Otherwise, by some people call that a mortgage gap, as in mortgage the house and take all the money and put it on this trade. I wouldn't recommend that, but it's one of those they're basically saying is a high probability setup. Gap and crap. That's when it gaps up and then it falls back sharply. Okay, or the reverse of that is a gap and snap. It gaps down and snaps back up. Well, these are 4 that happen a lot of the time, and we'll go over some examples as we go along. And here's an example. Most of the examples at the beginning are ones that are back a number of years, actually, but it really hasn't changed. This chart is from the 18th of August in 2010. The prices are different, and the symbols may be different than today's, some because some might have been bought out, but the principles hold the same. Now, this is a daily chart at the end of the day on 8/19. It's actually probably 8/18. All right. Anyway, what this has done is it had a move up from about 85 up to a little over 100 and did a pullback, and it's about to report earnings. People were getting anxious about the earnings. There were no pre-warnings or anything like that, but people were getting anxious and did a little sell-off. I think the market was a little weak at that point in time as well. But as you can see here, if you were thinking it was going to be bearish, would be anything below 95, and bullish would be anything above about 105. If people were short here, I bet you that a lot of the hedge fund managers, they had their stops above 105, 107, something like that. And if people were long, they're going to have their stops down below 95. And these are the longer-term position traders, long-term buy and hold. Well, this was the 2-hour, 120-minute chart at the end of the day on the 19th. And you can see how it had kind of wobbled around here and basically was in a trading range from about $96 to 100, with the highest being up here at around 105. So what I'm thinking is you'll have a minor set of resistance around 101, and 105 would be a more major resistance. At the open, after reporting earnings, it gaps up here to 105. Now I'm going to go back one second. What do we remember about 105? This is one that I really like where it gapped to. Most of the time, stocks will gap usually to a resistance or a support level. And then if you can get it to stabilize for a period of time, I don't use a 1-minute chart. The lowest I'll ever go is a 2. I try to trade on a 5 or higher to do a day trade. But with earnings, there's a couple things you have to watch out for that I'm not going to cover very much today, and that's on other stuff that I can talk to you about later, is you don't necessarily want to get a stock that is very spready. That means that between the bid and the ask, you have 20 or 30 or 50 cents. Because that right there is going to expand. You know, with one trade hitting the bid or the ask, it's going to move up and down 50, 60 cents. You don't want a thing that's whippy that will go way up and way down in a heartbeat. But by earnings, you're going to get spready and whippy, especially when you get a $100 stock. Some of them, with the ones that trade, say 1, 2, 4, 5, 10 million shares a day, it's going to be less spready and less whippy because there's lots of shares. You get the $500 or $400 or $250,000 stocks, I can guarantee you that it will be spready and it will be whippy. And it will, if you get caught on the wrong side of those, you can be in deep, deep trouble. However, you could potentially take advantage of people that are caught on the wrong side as well. Let's go back down to the chart. It opened right down in here, a little under 105, but it's basically around where that magenta line is, around 105. And it's a 2-minute chart. So the first 2-minute chart, it stabilized with a high about 105. So the plan here was to enter on a move above 105 with a stop 50 cents lower, 104.50, which is approximately the low of this candle and the low of the body here on the previous 2-minute candle. So I'm risking 50 cents on a $105 shot. Okay, because I do the calculations, it'll tell me, depending upon that 50 cents that I'm risking, times the number of dollars that I want, that I'm willing to risk in a trade, will tell me how many shares I got. But I'm just, right now, just telling you how, not how many shares to buy, just where you want to put a stop and targets and the like. If my entry's here and my target is around $107 on the first, which is $2 per share, And I came up with that with basically using about a 1-to-1, 2-to-1 ratio. I like to try to sell parts, take a little bit off the table if I can get about 1.5 and 2-to-1. That way, I've already banked some of the money. If it comes back on me, I'm not going to have a losing trade. On this one, I went long over 105. At the third, these are 5-minute charts now. Once it went up, I could transition from a 2-minute to a 5-minute chart. It started stabilizing around a 107 to 107.50, and this move up and the move back, I sold half of my shares at $2 per share. And I said, okay, now I've put some money. I'm playing with house money. I cannot lose in this trade, and I'm going to do a trailing stop, trailing basically the low of the prior candle. And from here, the low was here, down here about 105.50. By the time I sold at 107.50, my stop was here at about 106.50. And I could move it up in another 5 minutes to about 106.90 to 107. Thank goodness I used that and stayed true to my game, because at some point around in here, there's the closing body, but somewhere in there, this thing pulled back to almost hit my stop. This candle was not all green. It looks easy to stay long in this one when you look at it in 2020 hindsight. But during the trade, there was the pucker factor was, okay, I'm going to get taken out, which is one of the reasons why I like to bank some money. It makes it easy for me. It makes it easy for me to stay long the trade if I've already put some money in. So it's psychological as much as anything. As it comes back up to here, if I was trading in thirds, this doji, I'm looking at the candles here. This doji right here, followed by a green candle up, tells me there's still buyers. This doji followed by red candles means to me that the sellers are starting to take control. If I wanted to be very aggressive on my trade, I could have gotten out at 109. Okay, but I wanted to try to see, because I'd already had half of my money off the table. I wanted to see if I could get a little intraday J hook where it does a pullback, does the candle here like the doji and moves back up, and then continues on. Now, CRM had fairly high short interest, so I was also looking for something if it's above resistance and it has high short interest. So you can't see the resistance on these charts, right? They're well above 105. In fact, I think it might have been even all-time high. Anyway, for here, I'm trying to let it run. I'm trying to judge whether the momentum is waning, and towards the noontime area here, I know that it's going to basically have completed as far as a day trade would go. So this is late morning on a 5-minute chart. Okay. One other thing I want to point out, now you probably can't tell that very easily here, but I use the 3, the 8, and the 17 exponential moving averages, and the 50 and the 200 simple moving averages, and I use those on all the charts, any time frame, from a 2-minute chart all the way up to a weekly chart. What do I use them for? I don't use them as for crossovers and triggers and buy points or support or whatever. I just use them to help me visualize how the trend is going. So when Rick a minute ago was saying the trend is, people say your trend is a trend, how can you define what the trend is? I have something that the computer helps me define what my trend is by calculating it constantly. And that's my 3, 8, and 17 exponential moving averages. I don't have the 3 on here because I really picked up the 3 a little bit afterwards to this. Right in here, you can see that this moving average, it pulls back the moving averages and hugs it. A lot of times what will happen, the stock will move up to the high, will pull back, and at some point along in here, if you were not long, you could go long knowing that it's probably a high probability it's going to retest the high of the day or near it. And at some point here, then you can decide whether it's going to break out and continue to go, or it's going to fail. In this case, it failed. But I already had my money, so We're good. Monsanto. This is the daily chart of Monsanto. It's coming up on earnings. It had some pretty nasty day here, and then it kind of stabilized. So I can bet the people we're looking at 407.50, and that some people that were short are probably saying anything over about 52.50. You know, they're going to have to cover. So I've had several days of consolidation, but look at what I've got written here: void above with a possible move to 52.50 or higher. Wait a minute, what's a void? There is no void. It's not a gap. No, it's not a gap, but this was a straight waterfall. In this straight waterfall, there are no major areas of consolidation like there are for these 3 days here, but we're above that. So if I had these 2 days over here where the candles are in the dojis and I have some volume, there's going to be some resistance there, but based on this candle of 928, I don't have a lot of resistance here. So I call that a void. It'll basically, it's like having Vaseline on the flagpole going up. Now, trading plan. B, can you hold that question to the end, please? I'll be happy to talk about that. Trading plan. Entry over 2 minute chart. Now I'm using a 1 minute chart, but I'm really trading on the 2 minute. Wait a minute, Steve, how can you do that? What I'm using is a consolidation of those. I wanted to see where the consolidation was happening, because in a 2 minute chart, it was a big, big candle. On the 1 minute chart, using both of them together, it allows me to set a tighter stop and to actually get in a little bit longer. So what I did is I want to go enter or buy above the 2 minute, the high a day, with a stop below the low of the prior 1 minute candle. So instead of being down here at 49.45, I can move it up to 49.62. Why? So I can buy more shares. So I have a tighter stop, because I set my stops based on where will I be proven wrong on this trade. What I mean by that is, if this candle goes green and gives above this blue line and then suddenly turns red and goes below that red line, that's not a good sign. I expected it to go up like you can see on the charts there for the next 3 green candles. But if in fact it turned red on these candles here, my pattern and expectation failed. It's time to get out. Don't hang around hoping that it's going to change. It might change, and then you can get back in if you can see, one, a pattern, and it makes sense risk-wise. But don't stick around under hoping. All right, I decided that I wanted to only take half of my normal share size due to the pattern that I was trading here on the daily and the fact that the market had gapped down. Now this gapped up, so it's relative strength, but eventually a sinking market's going to get everything. So I don't know whether it's going to have enough oomph to get where I want it to go. So it doesn't have any tailwind. I'm risking about 15 cents, so I bought 400 shares, and I only risked $60. Now, I know some people had asked the other day, Peter, when she was here, said, how can you risk only, a small amount of money and make money? Well, here, I'm going to show you. I'll show you how. She showed us how she did it. I'm showing you how I do it. All right, my plan is to sell 200 shares at 1 times the risk amount, 1 times R. Now, I normally like to do 1.5 to 2, but I'm going to be quick to take money off the table because of the pattern that I've got going and the market going down. And then I'm going to do move my stop up to break even, and then as it continues up, I'll use a trailing stop. So I had a trading plan, and I developed that all in the pre-market. All right, here's the results. Got in at 49.845. This is with commissions. Sold 200 shares at $50.13, 2 times the risk, even though my plan was to sell it at when it got to the 1 to 1.5 R, but the stock was still moving up. So what happened is it moved up, and then right here I had a little bit of a wiggle waggle, And at that point, I was looking to sell at about 50, but it kept going up, and I got a little bit higher, and I sold where this red arrow is. And now I'm doing a trail stop, so I can move the stop up to break even. Then I can move it up to under this candle, or about 2/3 of the way, 1/3 of the way into this candle, 2/3 of the way down. Then I moved it up to this green because it started to look a bit weak, and then I put my final stop right here. So I've taken my first increment out pretty quickly, and now I'm going to trail out the following. Moved up stop to break even, continue to move the stop up using trailer stop on a 1 minute chart. This is a 1 minute chart, guys. 1, 2, 3, 4, 5. I'm 6 minutes into the market, and the stock's starting to reverse a little bit. Well, I'm expecting markets to do reversals at what? There are time things that you need to factor in. I'm not going to go into it into greater detail here, but there are times that the markets are more prone to reverse. A couple of minutes into the market, 5 minutes into the market, when the buying frenzy or selling frenzy starts to wane. At about 10 o'clock, when market news happens, 10:30, market news happens, and about 11 to 11:30, when you're getting through the end of the morning session and people think about going to lunch. So there are times that it's a higher probability to do a reversal or stoppage in the move. All right, I sold my last 200 shares at 51.03 after the doji in the 1 minute chart, which is right about there. When I saw that, even though I had moved my stop up there, I didn't wait for it to get all the way down. It broke through the body. I'd had high volume, and the volume looks like it had waned. I'm at a 5 minute, 1, 2, 3, 4, 5. I was 6 minutes into the trading day. That's one of my reversal times. The market was still going lower. I decided I've made my money. I'm going to get out. So what happened here? My profits are $56, that 1-to-1 on the first set of shares. The second, I made $236, $292 minus $8 in commissions for a $284 profit. Based on $60, I made $280. That's 4.81 times what I was risking. So that proves how you can make money on just a very small amount at risk. SHLD. This is in the December time frame. Sears Holdings. Sears had some resistance areas at two places over here, with this one confirmed that it didn't get through there before, around the $70 level. And it had, and I'll point this out on the chart, 32% of the float was short. That is a tremendous amount. So if it gets above the $70, you're going to run into some amount of sellers, and above 74.5, you're going to run into even more sellers, and above 77.50, you're going to even get more sellers. So at one level, two levels, three levels, and I only put down two of them on the chart. It opens. 2 minute chart, opened to 9:44 a.m. That's all it's looking at. Entry was going to be over the first 2 minute candle. Entry over 70.70, stop at 70.30, which is where the red number is. And it kept on moving on decent volume, picked up a decent volume here. Okay, then I could trail the stop out, and there was actually an opportunity, even though I've got the stop here 71.77, to add on if I either hadn't been in before or to add to my position. I normally don't add, and I will never, and I mean never add to a losing position. We'll never do that. I never average down. That is a no-no for me, my rules. All right, so there were two entries, one here at $70.70 and one was $72, and one was 40 cents difference for the stop, so 40 cents per share risking, or here is about 23 cents at risk. Now, this would have allowed me that if I was long to potentially add over 72. It would actually reduce the amount that I had at risk. All right, entry number one, buy at 77, stop at 70.30 for the low of the day, 40 cents, or you could potentially use the low of the candle that brought you in right here if you wanted to be more aggressive on the stop. Entry number two, over 72, I call it 25 as 23 cents, but I round it off to tell me how many shares I could buy. Okay, so these were the possible entries on SHLD. I don't remember the results of the stock trade, or even if I took that trade. I don't remember. I'll be honest with you. Every example, I don't necessarily, I have not necessarily taken every one of these trades. Most of them come from trades that I took, though. This is a trade that I do remember taking, the Java. It was before, this is before earnings release. Java did a big move up. It did basically a cup and a handle. We can recognize that. The resistance is either between 8, which is a prior high over here, or just under $8.50 based upon this last swing high. It gapped way up over 9. Oh boy. If you had been short anywhere along here thinking that it wasn't going to do very well, and your stop was, and it gapped up to over $9, you're going to have a little pucker factor, which is probably why there's two things are going to happen. One, you got one set of buyers who's going to be buying because they like the fact that it supposedly had a very tight, they had a negative expectation of it, or, sorry, let me back up a little bit. I misspoke there. Some people are going to buy it because they're impressed with the earnings results. Some are going to be impressed with maybe the conference call. Others are going to buy it because they are short of it and they have to cover. Well, here, the entry would be over $9.50 with a stop less than $9.25 because this is a 2-minute chart and I'm 6 minutes into the day and I'm a little late, so it's a little wider. I should have probably been in here at the first 2 minutes, but I didn't see it. Okay, so the first target would be approximately 2 times risk, about $10, and use the second would be the trailing stop. Okay, or some big spike up, a huge move up. So 400 shares, I'm risking $100 on the trade. It has a fair amount of short interest. I don't remember the exact number, but I suspected with this large gap up, we might see some follow through. Okay, I ended up following here. This is a 2-minute chart. The stock, my break-even stop was over here at, what was the plan here now again? 950. Okay, target was $10. Target was $10. I sold at $9.98. On the way up, on this candle right here, I sold at $9.98 because I started seeing on my level 2 chart, I started seeing some resistance at $10. I expected that. So I sold a little bit below that. I didn't, my target was 10, 998 is close enough for me. I took half off the table right there. Then I moved to stop up to break even, and I'm going to let this thing work its way out. Because I'm fully expecting that right here, this was my first sell point here on blue, right? I'm trying to let it pivot. I'm trying to let this do a little bit of a pullback, give it some room, and then establish another to be able to move my stop up. Well, this was my break-even stop right here at around, what, 950. I got in break-even. I think I got in a little bit over 950. But anyway, here we go. Then after it moves up and breaks through this first wave move up at about $10.50, somewhere about there, I could now start trailing up using a pivot point, and it's a little bit subjective. What can I move my trailing stop of? I don't use a percentage. I don't use the moving averages, although I do watch the moving averages to see that they're in parallel like railroad tracks with me, that the trend is still going in my favor. But I use pivots. I can use just candles straight up. I can use candle signals. I can use how I feel based upon how these moving averages are either staying in parallel and staying wide apart or getting back to closer together. So what I wanted to do is I wanted to let it pivot. I wanted to try to keep my stop below the pivot. And what I did is I sold another quarter at $10.98 from buying at $9.50. That was 5.8 times what I risked, and I wanted to let the remainder, ride using a pivot trailing stop. So I decided on this last quarter, 100 shares, to do a pivot. So once this pivoted here, I move my stop up to here. Once it pivots here, I move it up to here, and then it's going to break it. So we had 950, then we moved it up to 975-ish, then we move it up to 10, then we move it up to 1050, and finally it got up to 11, and that's where we sold talking about here selling at 1098. We basically now sold at blue with the stop still at 1050, and I think I got stopped out there. I don't know where I sold the last quarter. Don't have that as an example, but you get the idea of how I'm managing the trade. These recent charts. Okay, we're doing quite well on time. What I'm going to do is I'm going to try to go back up a little bit and to pick up some of the questions. What indicators on the charts? It varies from each of the charts that I've got there, but the blue line here is the 8 EMA, the 17 is this magenta line, and these are old charts before I went to 3, 8, and 17. So all of these are basically the 3, the 8, the 17, but I've also probably got the 50 in there. Okay. Get any volume in THLD? Nope. Nothing like that. Trying to pick up the actual questions. Okay. I use Don M. I use manual pivots and trailing stops. I don't do anything automatic. I always use a limit order on everything. And I do use Think or Swim. I have used Interactive Brokers when I was trading this. Yeah, I think that answers the questions that I can read right here. How do you find your charts in the evening? James, can you hold on to that question and repeat it when it comes to the question time, please? If I don't cover it, I'm going to cover a little bit. Okay. All right, what we're going to do is we're going to go to some recent examples. Recent examples for T-line runners. What's a T-line runner? I'll describe that when I get to the chart. They're Taser, Berry, and Code. So let's look at Taser. So Taser, the T-line run began with the gap up. And I'm trying to remember. Taser basically did a multiple gap ups, but the one I'm thinking here is in late October. And then we also got one again up here when it gapped over the resistance area at the end of November. So what you can basically see right in here, when you get the gaps up like here on the 30th of October, and it gives another gap up again on the 26th, those are indicating fairly strong moves up. If you don't get in on that day, what are our expectations? Our expectations that if they go up like it did here on the 30th on gigantic volume, you would expect at least a 2 to 3 day move up before consolidation. There's probably some news event. I don't remember what it was, but I know there was a news event on Taser, and that it's going up. And then why do I have $18.63 marked over here? Oh, wait a minute. Looky. It gapped up, and it got up to this $18.63. These prior swing levels acted as a bit of a consolidation pause resistance. So how can I use that to my benefit? One, if I'm trading it on a lower time frame, maybe it gapped up and I got long here, I could expect it to pause there. I could either take my profit and run at 5% or 6%, something like that, or I could say, you know what, I'm going to expect this. And better yet, a lot of times we don't see it on the gap up. We could keep it on our radar, put it on a watch list, and when it does the consolidation, it does the pullback. In this case, it pulled over sideways and pulled back. And one of the ways I can look at this is the dashed blue line is my 8 exponential moving average, sometimes referred to as the T line. The magenta is the 17 EMA. The dash yellow is a 3. If I could get all 3 of those to be moving in parallel like railroad tracks, that means to me that the trend is solid, like right in here. This is a good solid trend here. What is this telling me when they start to collapse on one another, or they try to crunch on one another? When they collapse down on one another, especially when I see my stochastic RSI collapsing down in here and then start to move up, this is a perfect little mini J-hook. It's not as deep as a lot of J-hooks are, but it's deep enough that you can trade, and it's a continuation pattern. So this right here is a continuation and sets up a T-line runner. You can see right here, there are only, I can only see here one time where this stock closed below, trying to get this to hang up, sorry. That only one time where it actually closed below the T-line. Excuse me, I've got to try to hang that up. I can't figure it out. It's still, the base is ringing. Oh well. Okay, so what we got here is the T-line runner, and the 1-2 times that it closed below the T-line right in here. But this would have been very, very easy for somebody to go long right in here around 1860, and maybe this one day right here would have probably scared you. So, all right, where are we going? Back to the charts. All right, Taser, Barry. Okay, let's go to Barry. Now, Barry did a nice move up here back in October, early November, did a pullback. My stochastics are easing back, just a little scoop here, another pattern that I recognize, and then had a strong move up on a little bitty gap, but a strong move up. If you could catch it early enough, you could actually see this and say, okay, my prior resistance point is $27. Top of this candle here, the swing point. If you go long on that day, you expect that your first checkpoint to see if this thing is going to break out is around $27. You would expect some sort of profit taking around there. And above that, you would probably expect it to continue. Well, sure enough, it got over 27. You could do that if you got in early. or you could wait for confirmation, wait for the breakout. I prefer to normally get in earlier and then use that as a checkpoint. And if I only make 3% on the trade, so fine. If I make 5, 6, 7, and it continues up from there, that's fine. But I don't not participate in this run because I'm waiting for confirmation. Anyway, the big move up, the good volume tells me that we're probably going to get the move up and it's going to continue. And sure enough, you notice how it rides the 3 EMA up here. I have noticed that a lot of stocks, now this one, I can't prove it right here, but let me go to the other chart here, Berry, B-E-R-Y. I was going to say it's going to be on earnings. Sure enough, it was. This was the anticipation of earnings. And remember what we said is that if it does a move up and then the most recent move before the release was negative, people were anxious about it. So once it released, there are a number of people that want to get in. One set of persons are the people that were short. They want to cover. Another is the people who were long back here but then bailed out and got scared before earnings. And 3 are the new eyes, people who only just discovered it. So you've got 3 groups of individuals all clamoring to get on board. And that's how you can get one of these runs up like that. Now, I don't think that there was a significant amount of short interest at that point, but I can't tell for sure. Let's see. We've covered taser. Let's do code. Let me use my code over here. Code did a gap up on earnings. You notice how it starts to run up at a 45-degree angle. The only way to probably get up on board of these after they do the gap up, if you don't catch it on the day and can't drill down to a 30-minute or a 60-minute and look for the pullback, like this 30-minute pullback or a 60-minute pullback and then it started to go higher, is wait for a move above, this is personal preference, a move above the initial day. Now, I don't wait until it goes above the high of the day. I wait and say, you know what, the second day it opened pretty much where it ended and didn't go below that. That's strong. It's above the body. That means that the buyers are still outnumbering the buyers are still outnumbering the sellers. It's still overwhelming them. And so that's where we are with code. That once these stocks move up, they get earnings, they gap. If they can trickle upwards, you say, well, I missed the big move because the gap itself was 15%. That's too much. Well, it might be too much on the day. On that big move day, it takes a while to consolidate. In fact, it takes all of that day. And let's see what we're looking at, what day that was. That was the second. Let's move ourselves to the third. Now it's starting to pick up a little movement. And let's go to the 30-minute chart. And you can see where on the second, it's pretty sideways. Then it trickles higher, and then it moved a little bit higher today. This is how you get your T-line run, or I say T-line. This is going to be a 45-degree run or a 3 EMA runner. That it usually tries to run up the 3 or the 8 EMA. This is very, very strong in that it's running up the 3. Now, it's pretty ripe for a pullback, but depending upon how much the short interest is, it could continue to run. Okay. Douglas, Doji plus gap up on the 2nd of December. Trader's best friend, TBF. Let's look at that one. We had a doji here after some consolidation. If I look at the weekly, you're going to see that it went way massive up, pulled back, and then did a consolidation between about $12 and $16. So it's really a very wide area. It's a big mover. It averages about a $2 move every day. So it's not for the faint of heart. but assuming that you could handle the risk numbers, that this doji gap up, and I bet you that's going to be on earnings. Let us see. Dudley. No, it wasn't. All right. All right, so Dudley does its gap up, then it consolidates. So it does move up. This is what I call a 1, 2, 3 pattern. 1 is the big thrust up. 2 is a consolidation sideways, and 3 is a continuation move. So Digital Alley. Oh, does Digital Alley have something to do with the Ferguson stuff? I'm not following it. I'm not in it. So, all right, GME. Let's look at GME on the 21st of November. 21st of November. It gapped down to about the 39.30, and that's the low of this candle here, and the tops of these areas right in here roughly would be about a support level. Where did it gap down to on, quote, bad earnings, unquote? Well, I don't really care whether the earnings are bad or good. I don't make that kind of judgment. I let the chart tell me, and everybody's telling me by making a gap down that much that it is, and that it's probably going to continue down. You're going to get the first amount on 21st. See if it goes back that far. Yeah, here we go. It's a 15-minute chart, and you got this first 5-minute initial buyers buying the dip, and then it overwhelmed them. So when I was looking at the daily, I'm saying that I expected it to hit some sort of resistance around 39.31, and my next target was somewhere down here around $36.50. So it's enough to allow me to go short from a swing perspective or a day trade perspective. So if I get in here, and I'm going to say for the 15, I should be able to look at it also on the 5-minute chart. Let's go over here to the left. If I had used the smaller time frames, I can almost guarantee you that we would have had a 5-minute chart or a 2-minute chart wig waggle and allow us to go down and try to get to 36.50. If we were doing this purely and solely on the daily chart, we could have shorted when it got below 39.30 or 39.25 and had our stop up here at around 39.75. That's 50 cents. Looking for us or a target around 36.50. What it did is it moved down. It consolidated for 1, 2, 3, 4 days. Then on the 1st of December, it resumed its downward movement. What this was, it was consolidation. There were some people trying to pick it up, thinking that they might be trying to do the bottom fish. But one thing there's telling me that if you were still short, you could have lowered your stop to around 38.50 to 38.75. So you would have had a little bit of money locked in. What would help me and keep me in the trade was the fact that all of my moving averages appear to be in parallel still. No matter what is happening here, this is just a consolidation, no new sellers, probably over, and it's a near-term equilibrium has occurred. The doji is a signal of indecision. The doji could be a signal also of a pause if there was a greater move, because if you think about it, this move from here at $44 all the way down to where the close was 13%. It has to digest that move. You can't, it's like trying to run up the top of Pikes Peak in one go. You're going to have to stop somewhere. So we probably could have expected some sort of pause. If I look at a 2-day chart, you can see how it goes down and pauses. I go to a 3-day chart, it even becomes more prevalent. You can see where potential support levels are, and that's where we actually, if you look over here to the left, that's where we kind of wigwaggled and did a consolidation before continuing to move to touch the lows. And this is a 2-day chart again. I'm going to go back to the daily 1 day at a time chart. And I would suspect that this one may be done. This move might be done. That we would have potentially exited on the 3rd. Okay, let's look at. Not all of the setups work. Let me explain. Autodesk. Autodesk. This gap up implied, I'm going to look at the weekly chart. So it's weekly, moving up there nicely. I'm going to look at my area chart. It also has a nice move up. So I would have expected this one to consolidate and start to move at a 45 degree, which it started to do here, but then it went sideways. What's going on here? Well, it's probably just trying to digest this entire move that it did back here from $50 to 62. That's 23% in 1 month. It's probably trying to digest those. So I'm using the candles, and I'm not seeing the candles here. So I could go to a 2-day chart. I could go to a 3-day chart. I could go to a 4-day chart. Now 5 is really the weekly. This is what it's telling me. Say it's basically starting to running out of juice. This move from the $50 to $55 area up to 60 in such a short period of time, it's just resting. So I doubt that playing the 45 degree I could have stayed beyond the first when we did the big pullback. But at some point in time, with this big movement, I'm going to bet that it's on earnings. ADSK. Whoops. There we go. ADSK was on earnings, that at some point, that one's going to turn into a buy again and start to move up. What you could potentially do is watch it on the weekly chart for a pullback. Where would that pullback be? I'm going to guess to the top where the support area is here around $58. Wherever this is here, $58. Yeah. So I'm looking for some movement pulled back here and then look for a buy signal, a candle, a pattern that I can recognize. But it didn't work yet. It is the one that should have been a good movement up at a 45 degree angle, failed. The other one that failed was HIBB. Now, HIBB gapped up. What did it gap up to? It opened right here around $51.40. 51.40 is around where this consolidation is over here to the left in September, no, July. So there's some consolidation here. I can probably see it if I went to 2-day chart. Ooh, you can see how there's consolidation there, or a 3-day chart, or a 4-day chart, or even a weekly chart. You now see how there's lots of consolidation going back, heck, over a year and a half. Okay. So the idea that it gapped up and got up to this 51.25 resistance area right in here, it did trade up higher after it opened, but it started to pull back. Now, what day was this? Day was the 21st. I look at the 30-minute chart. The 21st. Let's see, we could probably get to 15-minute here. 21st. All right. Here's the high wave doji, kind of like a shooting star. And once it got below here, it failed. So I'm not surprised that HIBB failed on the daily, because it got up to resistance. It got up also to the 200-day moving average and hit some sellers. What's it doing now? HIBB is consolidating that move. HIBB is a candidate to move higher. But What would you just buy it? Well, I can't buy it because I don't see a pattern I recognize. I see some sort of triangle here, maybe a move above the 200. Maybe if I see some sort of candle. Right now, if you took a risk, you'd have to find something that you believe in. It's proven to you that it works, and you can set a stop that's at a reasonable point, and you're happy with that amount of risk. Today's example: FRAN, NOC, INVIN, FB. So let's look at FRAN. FRAN has a wonderful daily candle, primarily because it opened right here around the 13. You see the highs right here, and the highs back over here at about $13. So that's where the resistance is, with the next level of resistance around 14. So it had approximately $1 to run. Well, if I use the 5-minute chart, I can guarantee you that FRAN was probably spready and probably a bit whippy in the very first part of the day. Let's go to a 2-minute chart. Oops, January. Not today. Let's go to 2-minute. Okay. Silly boy. All right. All right. Here we go. There's the opening of the day. That's the first 2-minute candle. This would have been possibly a candidate to look at the 1 minutes, but I won't go into that. It's still the 2-minute. Use an opening range trade where you would be long over 13.50 with a stop under 13. That's 50 cents. Your target, remember, the first checkpoint was $14. So we were looking at a potential of 2.50 cents equals $1. So I'm okay with that trade. We could have gone up here and taken and you notice that we did this first doji right here about $14. Other people were taking profits at that $14. Remember what we said on the daily, that there was some resistance, minor resistance at 14? Okay. The short interest ratio is 8. I bet you that short interest on the float was quite high. So this would have been a high probability trade or a day trade. And could very easily have gotten up to 14, 14 and a quarter for some or all of it. And pretty much after this first 15 minutes, you notice it's pretty much done. That if you had been able to get into 13, 14.50 is about 11%, call it 10%, rounding it off when they can take in the commissions and whatever. Even though it did a pullback here on a 15-minute chart, and you could have gotten in at 14 and ridden it up all the way up to $15, that's still 6%. But you really can't, in my mind, I probably wouldn't be able to think it's going to go back above 14.50. So if I'm looking at this puppy, can I, if I don't get in the first 5 minutes of the day, can I buy this? Can I get this pullback here? Well, 13.75, 14, call it 25 cents. And at the high of the days, we're over here at 14.60. It's a little over 2 to 1. You might be able to do it if you think it's going to continue to do a run, but it's a bit dicey. So that's kind of what I look for. Okay, one more thing. I think what I'm going to cover is NOC and FB. Northrop Grumman. Northrop Grumman, its first 5 minutes did reasonably well. Okay, but then it pulled back. Where did it pull back to? It pulled back to 143. And then it stabilized. It says, you know what? I'm not going any lower than that. And you could have either played above these dojis, above a 143.50 or so, looking for at least a retest of the high of the day. We did get some sellers, or looking for the breakout of the high of the day. And breakout of the high of the day kept on going. Let's look at the 15-minute. So if you had gotten long any of that, and even just taking your money at noon, you could have got 2 or 3%. That's not very much, Steve. Yeah, but it's $3.50. It all depends on whether you are a percentage gain trader or you're looking for dollars. I look for dollars more than I do percent. I'll take 5% or even 2% of a large trade. If it's a large number of dollars, I'm okay with it. I pay my bills in dollars. I don't pay my bills in percent. I pay my commissions in dollars. I don't pay my commissions in percent. So that's the philosophy that I use. What was the other one we use on Facebook? Let's use the daily on Facebook. And that is the daily. And I like the setup here for the daily. For that was a doji-ish type of candle yesterday. Gap up. I like where the stochastic RSI is, so it gives me an opportunity to go up. I don't know what the nose is. I probably don't care. The first target on a swing is about $78. That would be a first checkpoint. If you get above that, you're now into this gap with a potential target up at around 80 to 80.5. If you want to day trade it, 5-minute opening range, 5-minute, it would have worked for about 3 candles, and then it came back to where? Came back to the open. I bet you there are a lot of people in there thought it was going to fill the gap then. Okay? You notice what I see here with my 3 EMA, my 8, and my 17. They're all expanding. It's up, and suddenly they contract on one another. They collapse. They come together. They crunch together here. And in a move up over 75.75 is a very, very good opportunity, low risk entry to get in over 75.75 with a stop as high as 75.50. Let's call it a quarter. You could have gotten in risking a 25 cents per trade, looking for a retest of the highs or near high. I'll call it the body high. And that would have been a 1-to-1 trade. No, is that right? I guess it is. 1-to-1 trade, but and 32 cents, 45 cents. I mean, so maybe 2-to-1 to the very, very high. But it went higher if you look at the 15-minute. But it didn't do much higher. All it did is get up to 76.63. So my take is that if you can get gaps on earnings or some news event with high short interest, you can get some that really move and will be very, very profitable. You can also get, so people who don't like to trade gaps, they probably don't understand what the gaps are, how to drill down. If I were just using a daily chart here for gap, yeah, getting up here around the 50-day moving average around $75 to $76 would be a lot. I'm risking maybe to the low of the day, 75 a quarter. I'm probably risking 50 to 75 cents, but I'm looking at the potential of $2. So yes, I think you could potentially do that even on a swing trade basis without even drilling down to the lower time frames, not even day trading it. All right, I am ignoring your questions because I was trying to get on with this, and let me get to a couple more. Okay, here's was taser before the gap up. We have the resistance levels marked. This is the gap up day back here in October the 30th. So if this did a high wave doji, this is telling me if it continues up here, it's going to do a 30 to 45 degree run at least to 1863. Or if it starts to go down, it could do a gap fill down to 1650. The next day will probably tell me which way it's going. Well, the next day after 10:30 on taser, there was a gap, the doji day. It went up, then it consolidated. Wait a minute, it went sideways for 1, 2, 3, 4, 4.5 to 5 days. Wait a minute, why did it do that? Oh, wait a minute, what's over here to the left? we're having our resistance levels. It ran into sellers here at 1863. Duh, we already had that marked on our chart. We could have expected that. So even if you didn't get in here and ride it up and ride it back down, once it does this doji here with this stochastic RSI in the oversold position, you could go long over the high of the day back here on the 7th and ride that puppy up until it did another scoop. All right. So again, I'm preaching here. I didn't get into all of these trades. I got into some of them. Let me get down here. Barry, up big after the move up. A little bit of a pooper scooper here. Boom. That huge volume. I bet you Barry. Plastics. There we go. Barry, is that on earnings? Yes, it was. Ding, ding. Then it starts to go up. Notice how it had done its solid move up into earnings. Then I do a near-term retracement. Boom. And then ride that 3 EMA up. And even if you went on the next day here or the end of the day, which I suggest a lot, buying the end of the day, you'd be up 8% already. Now, if you don't get into this right away, you can either wait till the following day for confirmation, or you could buy at the end of the day based on how it's behaving on maybe a 60 or 30-minute chart, and buy at the end of the day and see if it's closing strong. Okay, let's see what we got here. There's FRAN. Okay, here was the FRAN trade this morning. Long over 13.50, stop under 13. They risking 50 cents. Target was 2 times that, or $14.50 dollar. Exit 14.25 because the momentum waned. You would have gotten the first target, and your second target, final exit, would have been about 14.25. Okay, I think I'm done with those. Okay, I'm up to the questions and answers. Let me try to go back and see. No, James, that wasn't a fax. It was the vets were calling back, and I told them not to call me, but I apologize for that. Bill E. had originally asked something about why is AG&C going up. Well, if you look at the 10 years and whatever, they're expecting rates to rise, but the 10 years pretty much holding its own. It's not going crazy. So, you know, that would be my take on why things are going smoothly. Daily. Oh, I just love to throw this away. That one's my wife. Anyway, agency and then the 10-year. I don't think the 10-year is going to be delayed a day. Yep. Okay. All right. So the 10-year is pretty much holding on. What are the next questions we got here? Hold on a second. Okay. What percent of float, Bob DK asked, at what percent of float do you consider shortness to be significant? A lot of it really depends on a percentage. I can't set it up as an indicator. What I do, though, is I've got here FinViz, and what I'll do here is I'll just go after FRAN because it's one. And what I do is I look, there's the shares on the float based on the outstanding. The ratio was 7.9, and that's what you can see when you look at FRAN. That's the number you see here in TC 2000. But I like to use the float short percentage, 18%. I don't know, somewhere around 10%. I mean, to me, it's kind of a gut feel. I look at the preceding charts and whatever, and you see how this thing, when basically gapped and went through the downward channel. So it's broken the downtrend so far. Now, where is it going to go up to? Probably about 16, maybe up here about 17. And then it's not going to be in a straight line, but we probably had a lot of short covering today. Leslie asked, do you scan for opening gaps? I try to look at gaps in the pre-market, and each of your individual brokers will be able to provide you with stocks that are gapping up. I like to get the ones that are easy pickings, the ones that are also going to have the biggest move. While I have breakfast, I'm listening to CNBC. I'm not listening to what the people are coming on and saying. I'm actually coming on, I'm trying to get the stock symbol. I could have the thing on mute if I wanted to. And I see the tickers are going across the bottom. The ones that are the earning stocks or they're always going to be in my list. I create an earnings list, and I will watch the earnings like a hawk, and then I'll look at those in the pre-market and see how they're doing. And then I'll pick up one or two that are not on that list. And so I'll have 4 or 5, maybe 6 that I'll be looking for. And all I do is look for those opening gaps. And if Rick points something out or somebody else in the room points it out, we cooperate and graduate. So that's how I kind of find them. So James A., find your charts in the evening. How many can you manage at the same time? Well, how many can I keep up in the air at one time is probably not very many. If I'm day trading them and not swing trading them, it's quite a few less. I'm probably only going to day trade 1, maybe 2. If I'm swing trading them, I can probably do 3 or 4 easily without a problem. But I'm going to have to set my stops in. They're going to be hard stops. Susie Q asked, do you ever... Where are you, there, Susie? I've lost you. Something about buying options instead of buying the stock. The answer is sometimes. The problem with buying options is if you wait for the gap to occur, the options makers pump the premium in. And so therefore you're going to be paying an exorbitant amount, I believe, for the option. You either have to get in beforehand, and a lot of times I'll use options to protect over an earnings that I'm going to hold. So I hope that answered your question there. Peter Ward asked, do you do much intraday below on your chart? I don't know, maybe it might. Do you do much intraday trading? Yes, I'll do a lot of intraday trading. Unlike, well, I don't know. There are a number of us, a few of us in the room that do trade intraday. I'll call it day trading, and I don't mean that scalping. I mean intraday, like I just showed you doing there. But most of the people here, I would think, are not day traders. They are swing traders, so they'll hold 1 to 3 to 5 days. Brock Medill asks, are your stops only close below your stop or as soon as it gets to below your stop? Brock, that's an excellent question. The answer is yes. It depends. And the rule's supposed to be if it needs to close below my stop. But most of my stops are set really to the set extent. If I watch and the candle's developing and building and it gets below those stops, even if it just touches it, I'm going to be out. if I put the stop in, I'm going to be out. If I manually am moving it, I'm using hard stops. And the reason I use hard stops is I'll find a way, in a lot of cases, to talk myself out of, or I used to, but talk myself out of selling the stock, saying, oh, I'll just give it a little bit more, it'll come back. Well, if it comes back and then moves back up, I can always buy back. I find that I don't enough. So the whole idea is set a stop. If it goes through the stop, sell. So the answer is really, my rule should be now changed to, if I set the loose stop, I need to then, any violation of that level needs to be a sell. Because if let's just say I was using a pivot area, do we have one here on the, what was the one that we had? Yeah, and here in FRAN, let me just go to the FRAN chart on a 2-minute chart. Okay. So let's just say that I was using FRAN here on the 2-minute chart, and I moved the stop up to about 14, and then it did this doji. See, I have a stop set up as for two purposes. And it's getting very complicated. I'll try to make it as simple as possible. It's set as much for, if I lose connection with the market, and if my internet goes down or whatever, it's an emergency stop. It's also if the market does an immediately whip against me and I'm not watching it, it'll take me out. But I don't get them up so tight that, and I don't let these things, because the stop here on this candle right here was right down here, $14. You have to remember, I'm on a 2-minute chart, so I have to give it that much room. Once I did this doji and I saw this thing at about 9:40, that's 20 minutes into the market, 10 minutes into the market, I'm not going to give it a whole lot of room. I've got it right here at 1385. Then I can move it up to 14 or a little under. Then right in here, can I move it under below this candle or to 1420, 1415? Sure. But I know darn well that if I move it to 1415, if it even opens a little bit lower here, you're going to possibly take me out. And if I had, the low was 1422, if I set it really too tight, like below this candle, I'd have been taken out. If I set it to the 1415 that I said, I probably would have stayed in. I would have stayed in. When would I be able to raise it? I don't know. A lot of it's based upon a judgment of when the momentum is waning. Notice how this 3 EMA is starting to arch over. Then I have to make a decision. Do I want to let this pull back and give away some profit for the potential of getting higher profit, or do I say enough is enough? And that's where it's going to have to be your call. Do I ever use the TTM squeeze to find the consolidation before the gap? I will use that when I'm looking at earnings, but I don't necessarily use it. Do you use pre-market volume to decide which potential gap plays to go after? I want to see some volume in pre-market. If it's, say, less than 1,000 shares, I ignore it. So if it doesn't trade any real volume, I have to ignore it. I don't put where do I find the stocks to put on the earnings list in the morning? I create my earnings list every weekend. I say every weekend. I didn't do it this last weekend. But I will create a list using briefing.com, and they have okay, let me show you right here. Under calendars, they have an economic calendar, which I suggest that everybody needs to be aware of. The economic calendars are what's going on during the week, so that you need to know, are there any upcoming reports that are going to affect you, like FOMC coming up, FOMC minutes. If you're in any kind of energy play, you got to know when the natural gas and oil reports are coming out, those kinds of things. If you're in housing stock, you need to know about construction and stuff. If you're in auto stock, you need to know when the auto reports. When you're in a retailer, you need to know when the retail reports are coming out. So you just need to know when it is so you can be prepared. I mean, you're not going to do anything necessarily. You're not going to say trade off of it, but you got to be prepared for some sort of shock to the stocks. Now, earnings. No. Oh, bugger. All right, it's lost my brains over here. So anyway, there's an earnings. I don't even know what my login is anymore. But go into earnings. There's an earnings list, and it'll provide me a list of everyone. It'll provide me a list of stocks by day, and I organize the ones that report after the market and before the market in one list, and then filter out those that are less than, say, 400,000 shares traded per day. I don't want to see the little ones. So if the average daily volume is too low, I'll cut them out, and I create that every weekend. I create a list on a weekend, put them in watch lists, and then I scan those watches in the pre-market. You go through a demo of how you find, analyze, and make a trading plan to execute the next day. I think I did that, Barack. Well, I can't do it exactly the night before because, like the Java, this is before earnings. All I knew the night before was we're going to probably get buyers over 850 and you're going to do short covering. It opened at 9. There's no way that I could have come up with the exact numbers. I have to quickly do this pre-market, and I have to come up with some rough rules of what I'm going to do. So I can do some of my homework beforehand, but a lot of it I have to wait until the next open. Okay, Violetta does also work on indexes. Yes, it does a little bit, Violetta, but not as good. And the reason I'm saying that is because you're not going to get as much of the shock factor all the time, and you're competing with the big boys out there. I don't normally apply these as much as far as finding the trades, but as far as using the opening day on opening range on, say, something like the spiders on a 5-minute chart, that's a 2-minute chart. Yeah, you could do it. Problem is, that'd have been about 21 cents on that one move. Maybe 20 cents is all you could have gotten out of it, unless you gotten in pre-market or gotten down below a 2-minute chart. I don't think I could have. So they tend not to make big runs like that. You can find them occasionally. The void, where did I mention the void? Okay, the Monsanto, you have the charts out there. I've already given them to you. A void to me is where there's little or no resistance. You can't see it on the candle that I'm looking at. It's a daily. Maybe I could see some intraday resistance if I drill down to a 60, 30, or 15-minute chart. But right now, I don't see any major resistance on the daily between about 52.50 down to about 48.90, 48.85. So on this big red candle up until this point right here, between that blue line and the top of this candle here, there are no sellers. I expect if it gets above that, it's going to continue to move upwards. Okay, what time periods to use? Well, Peter, for day trading. Like I showed you what I was doing. I try not to get down to the 1 minute. I'll do it for clarity, but I will not trade it. I'll trade the 2 minute as the lowest. I'd like to trade the 5 and the 15. And when I'm day trading something, it's not a good one. What was the one? FRAN and, oh, FRAN was good. Yeah, I try to get to the 5 minute. That's 2 minute. Let's go back up to the 5. You know, I like to use the 5, and I like to use the 15. And I like to trend trade the day. I'll start off, if I start off on a 2 minute candle on FRAN, if I get 6, 8, 10 minutes into the day, maybe 15 minutes in the day, I'm not going to stay on a 2 minute chart. I'm going to move to the 5, then I'm going to move to the 15 minute. I'm going to look at them all, though. I'm not varying and jumping back. If I enter on a 2 minute trade, I don't say, oh, well, I don't enter on a 15 minute chart and then try to manage it on 2. I can keep eye on all of these, but when I look at FRAN here, 1450 was some serious resistance here. So when if you got in here on this 15 minute candle here or above it, you probably only had about 50 cents in the trade, and you probably were risking 25. So it just barely 2 to 1. So I went, okay, you could probably do that with a good market. You could probably do that, but you'd probably be better off to manage it on a 5 minute chart. Might get you in just a little bit earlier, and you probably have 55 cents. Whoop-de-doo. Well, I did talk you through the ones that I've done recently. I don't know if I can do any more. Okay, good night, Violetta. Sorry. Thanks for staying up so late. No, Dave, I'm not going to show you my profit and loss. That's mine for me to know, nobody else to know. Okay, any other questions? I'm going to call it quits. I'm going to stop the recorder.